Hey, coming at you today. Really important. Decided to pull over and make this video. Been getting a lot of messages in the last week, especially with things. Let's call it like it is. Things are crashing. It doesn't matter how much our government's trying to insure us or economists try not to cause panic. And then I'm definitely not trying to create fear. This is an understanding point, so people will just hear honesty, numbers based, not feelings based, none of the, oh, I hope, or, oh, well, you know what, someone said this and that's what I like to hear, so I'm going to agree with that. No, this is the reality of what's going on out there. And this really stemmed from a conversation I was having with a friend about him wanting to buy some stocks and my opinions on it. And I'll give you the exact situation and why I gave my input at all. So what he had come to me with was, he had read an article talking about how the average mortgaged home in North America is, between 27 and 29 years old, meaning, a lot of renovations need to happen, building, renovating, developing, turning them into rentals, all that kind of stuff. Basically a housing market based on commercially bought goods. And to that belief, he looked at, Home Depot and Lowe's stocks and how, they've come down quite a bit. I believe the numbers were like 240, 250, all the way down to about 190. And I think that was for Lowe's. So what I did is I said, okay, yes, that's down compared to a month or 2 months ago, or just a recent swing. But the reality is that doesn't mean you buy it. And I realize, a lot of people, they're using the mentality, well, it's on sale right now. Yeah, but that's you got to get past the initial, okay, I think I'm a genius on how to play stocks because I've been winning a little bit over the last few years. No, you have to understand what's really going on. So what I had explained to him is you can't use where the stock was at its high point, because we've just gone through 2.5 years of the government feeding people more excess money than they've had before. Everything has an overinflated value. So if everybody was sitting at home during the pandemic and being fed money and looking for options to invest, yeah, if they just have extra money to spend, and they're like, oh, let's fix up the home while I'm sitting at home, or let's we got a baby on the way, let's build a baby room, and they just keep buying and consuming and consuming. That is what drove the price up. So what I said is look at stocks before March of 2020, and if you go back then, Lowe's I think was only at just under 100, like 98 or $99. That told you where its market actually was. And then during the pandemic, because so many people were renovating, building homes, building decks, just any home project, it drove the price of their stocks up because they kept having, profitable quarters. So coming back to where it was, oh yeah, it dropped from 250 to 190. Yeah, it looks like it's on sale, but realistically, before all that artificial money was printed and put back into the economy to fake the look of success, it was a $96, $98 stock. And the reason I'm giving that example is because that's what was brought to me 5 days ago, and I don't want people to get caught in that. If you think it's a good buy, because he also mentioned, they got a 2.13 dividend rate. And I was like, okay, well, that's good. At least you're getting dividends, even if the stock goes down. If you hold them long enough, the idea is that it will go back up. But at what rate are you willing to buy in just because it looks like it's on sale? The reality is, I personally believed it would go further down. I haven't even looked at it because I don't hold those stocks. But I need people to understand that just because it's down right now doesn't mean it's fully down. Like the market is down, I don't know what, like 28 to 32, 33% in some segments. Down compared to when? The last 5 months, because it's actually been on an increase all the way through the pandemic with all that inflated money. Keep that in mind. So if you're looking to buy something, and I am not advising you to buy anything. I just want you to have as much knowledge as possible. The best way to have that knowledge is find out where that stock was pre-January 2020. That'll give you a good example or a good idea of where that stock's valuation should be. Again, look at market cap, look at how much it's trading, volumes, that kind of stuff before you get into anything, please. Okay, so I'll leave that there. But if you're getting into the market, don't listen to your friends who've maybe had a few small wins. Please listen to people, or at least do as much research as you can before you go and spend. Things are gonna get tight, so please get as much information as possible. What else? Mortgages. Okay, this is the one that I'm seeing a lot of people get stuck in right now. I'm not sure where the rates are in the US. I believe their 30-year fixed is like 7.25, 7.5, and that's really high. But I'm not talking about the American side. It's going to go up. I'm unfortunately, what we've forecasted, you're probably going to get stuck with 8.25 to 8.75 before the middle of next year. It's unfortunate, but I think it's going to happen. Here in Canada, the people who've been following us and dealing with us, we've been explaining to people that since basically March, April of 2020, you can expect mortgages to be back up in the 5.5% to 6% range by the end of 2022. And here we are, bang on. That wasn't a lucky guess. We were trying to warn people that yes, while they were offering up mortgages for 1.25%, 1.75% here in Canada, there was a reason. The banks knew this was coming. Like, don't buy into conspiracy bullshit or anything like that. Just understand that things are done for a reason. They want people to acquire new homes, refinance. They want to stimulate their own. Notice how even the banks know to invest for the future. They got everybody involved for the last 2 to 4 years at lower interest rates, knowing when those 3-year, 4 and 5-year mortgages come up for renewal, it's not going to be under 2 anymore. It's going to be 4.5, 5, 5.5. And one of my friends actually just called me and said, oh, they're offering me, if I lock it in for 5 years, 6.5%. Isn't it? It's rather unfortunate, but that's just the reality of it. And everyone who didn't listen, I'm not saying we're prophets or anything like that. I'm just saying listen to people. Don't just go by the information that you want to hear. Listen to analysts. Listen to people in the fields. Maybe don't necessarily listen to a realtor because they want you to buy. They're never going to give you the true honest, because if they lose a sale, they're losing money. They're mainly in it for themselves. For the most part. I don't mean to be rude. I have great realtors. They would never lead me astray. We do great business, and they're completely honest. They've saved me thousands of dollars on each transaction, and they've given me their opinions when they think things aren't great to buy. But it doesn't mean all realtors are like that. So take that for what it's worth. Okay, and why is this all happening? Well, this is going to sound like I'm going to blame your governments, but the reality is everything needs to be corrected because inflation has overvalued everything. All that free money that people got isn't free. This inflation, and then going into the recession, which we're already in, I don't care what anybody says, is a result of having to correct overinflation. There's too much money out there, and if there's too much money printed fakely, it drives up the price. And if you bought anything in the last 2 years, chances are you paid too much for it. So at the flick of a switch, now that there isn't going to be money out there, you're going to be stuck with products you can't sell. $1 million+ houses are going to lose 30%, depending on which market you're in, but you can expect that. If you paid $1.5 million for a house last year, being worth a 1.1 or 1.15, that's the reality. And guess what? You're also paying, you're gonna have to lock it back in at 5-6%, no longer that 1.75. You're gonna be paying too much for a house that depreciated. Now I get it, a house is a long-term investment, but you're also paying too much in interest. So I don't know if that growth is gonna equal what you have to offset with what you're paying in mortgages. This is if you're on a personal scale. If it's held by corporations, that's completely different things. We'll get into that at a different date. This was just a video that I really had to do because there's a lot of fake information out there to try and calm people down, and people will listen to that because it's something they want to hear. Oh, I don't have to worry. I'll just keep spending the way I am. No, understand. People are going to get very wealthy over the next 18 months, and those are the people that plan for this. But that also means, because there's a cause effect, there's opposite, yin and yang, there's going to be people hurting incredibly over the next 12 to 18 months because they did not plan properly. If I make one point out of everything that I've just said here during this segment, it is, please go over your budget and find out where you're excessively spending. Cut out all of it and start banking that stuff. It's too late to really invest for huge gains, but if at least you start banking a little bit, and yes, I know inflation's going to chew into it, but right now you're looking at mitigating losses and increases in borrowed money, the rate that you're going to have to pay, the amount you're going to have to pay, the interest rates that you're going to have to pay on that borrowed money that you have is going up. You're going to need a little nest egg of savings. So please go through your budgets and cut out whatever you do not need right now and put a little nest egg somewhere. Because you know what? Let's say you don't get the huge hit. What you're going to have is you're going to have a little nest egg. So when you get an opportunity to invest in the next 12 to 18 months, you can take it. So as we come out of this recession in hopefully 28 to 32 months is what our people are suggesting, you'll have money to grab a hold of that upswing. Because believe me, we're not done on the downswing yet. So I'm sorry, I didn't want to cause a bunch of fear. I want realism. People will be like, oh, it's fear mongering. No, it isn't. I don't want anyone to hurt. I want everyone to be prepared and to make it through this. I don't want anybody starving. I want food on everybody's table. That's why we take the time to make these videos. I want everyone to do as best as they can or hurt as little as they can. So please, take this as advice from a caring perspective. I want everyone to do well and not be hurt as much going through the next 2 years at least. So please, rewatch this a couple times if you didn't understand something, and please ask in the comments if you want clarity on anything, because this is the kind of stuff that might change the way you're thinking and help you through the next few months. All right? Sorry if anybody got scared. That wasn't the intention. It was just to wake people up. But for now, I'm going to call this one end. Like I said, leave a question in the comments if you have anything you want us to go back on. All right. I'm out for today.